The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome back. Welcome, folks. Tom O'Brien, Darrell Martin. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials down 13. Nadex off 5. S&Ps are off 4.5. Gold is up 4.40. We got silver up 16 cents. Bonds, you got the 10-year up 7 ticks. The 30-year up 18. King dollar down at 301 ticks. You got the euro up 45, and the yen is trading down 43 at a price point of 107.84. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the top, on the side. Great time to test drive it right here, right now. Our man Darrell Martin, each and every trading day, 1 to 2 Eastern Standard Time, has an outstanding show. Also has an outstanding analyzer. So once you get the platform up and going, you can go test drive the analyzer. As we get over to the markets right now, bottom line, folks, is that what you have out here, you got a Microsoft. This is the number, folks, if you're looking what you may want to be doing here. Darrell Martin, what's going on?
Hey, how's it going, man? How you doing?
It's going great, man. I just want to go through this Microsoft quick, because what's happening is every time we come on here, folks, there's always fast action. Not always, but most of the time there is. In this particular case, there is, because what we're looking at is this. So Microsoft came out with numbers, good numbers. Microsoft tested its high volume high this morning, sold right off from it, and it's not going to be able to handle it. Microsoft was at 46.90. The high out there was 47.57. The low was the 46.60. That's what it's testing. It was testing $202 million, a 200 million share day. It's not going to be able to handle it. And if you go look at 3M from yesterday, it's pretty ironic, because it's the exact same type of setup, which is really bizarre. Now, what does that mean? Well, that means that if you're selling or buying the whether it's the Dow, whether it's the S&Ps inside the Nadex platform, what you want to be cognizant of is the weighting structure. And so inside the Dow Industrials, as we were coming into that 10 o'clock deal, Microsoft had been the biggest mover inside the Dow Industrials. Now Microsoft is number 3. That's up 38. Procter & Gamble's the biggest mover right now at 2.4. Pfizer is next. But what you have there is that if you looking at selling this baby, the Dow's a great place to sell. Why? Well, intraday out here, we got to a price point of 16,740. The high yesterday was 16,767. Couldn't handle it. Anything under the 16,757 means you're going back downtown. NDX 100 would be the same deal, because the NDX 100, now check this out, this gets really wild. So the NDX 100, Microsoft also was right up there. Now Microsoft is flipped out of there. Clack is the biggest one. Clack is going to do a $16.50 special dividend. Can you imagine that, Darrell? Isn't this crazy?
That's not too shabby. Yeah.
It's unbelievable. So picture this, folks. After the close last night, this is really bizarre, because after the close last night, Clack was trading at 81. And it's like, this is not going anywhere either, but it's just a total mind blower. I didn't look into it as to how they're giving a $16.50 dividend, but the bottom line is they're turning around, they're buying back more stock, they're going out and they're getting unlimited amount of money also buying that stock. So that's about as bizarre as you can get.
Who loves, that's nice. Unlimited amount of money.
No doubt about it. So if we get over and we start looking and what we want to be doing here, folks, is we go to the S&P. So let's go to the S&Ps first, because I know that the Dow one works really well. There's no doubt when you take a look at the Nadex platform. The S&Ps, so right now, folks, what we've done in the aspect of the E-minis is this. The largest contract that got sold yesterday was at 1450. 1450, someone hit 100,000 contracts in the E-mini. brought it down basically 8 points, which is pretty wild. The second one was basically just flattened out at 1550. Now, what we did is at the first expansion up this morning, you got to a price point of 1952. Then, whoever was whacking it yesterday looks like they whacked it again. Okay, so they hit it from 1949 down to 1939 in a heartbeat, which is pretty wild. So the real key is that, okay, so where do we line up the trade, and what do you think is the best trade, whether you want to be bearish and or bullish? So
I was looking for a short, but I was waiting for it to get back up to 1955 myself.
Yeah, no, this and if we pull this off, and there's plenty of time here in order for this to do this, okay? You have...
It's all about patience, man.
It's about patience. There's no doubt, and the risk-reward value of that. Yeah, even in 1949, we'll see whether it can basically get up into that level, because they see, this is where this gets interesting, folks. That the whack down yesterday, okay, took the S&P down 10 points, which is really, to take an S&P down 10 points, man, they hit this thing right at the right time. It looks to me like whoever hit it then probably hit it again this morning. It's almost the same variation. Do you know what I mean? They let it get up into that level, whack it again, and here we go. So if we can get this up to even 4 more points, I think that would be it. We'll take a look and see what we have over there. So if we pull that up, if you can pull that scanner up, Darrell, all right? And I got my platform up right now. So if I go over into the indices and I go to the... real question is, which one do we want? How fast is this going to happen? Well, we'll see, won't we?
So we're going to be looking for a pullback. You're saying 1949. Yeah.
The reason I'm saying the 1949 is that's where whoever the operator was hit it again. Do you know what I'm saying? I don't think they're going to let it go beyond that.
Just for that volume spike again that came in basically in the last 10 minutes.
Yeah, exactly. Yeah, and I'm lining that up. What I'm doing there, see, I'm lining that up with how they hit it yesterday at 1450 hours. That's what I'm lining up. So that's their position. That's where my head's going with that. And this is totally speculation, folks, but that's how it normally works, okay? When someone starts hammering the market, on the way down or on the way up, in the case if they're going down, you're hammering it. If you're on the way up, you're pushing it, okay? And what tends to happen, and that's where support and resistance come from. And what happens there is that same operator, that's where the battle line is set up. And his battle line or her battle line looks to me to be right in that area. And, this morning, they basically let it...
Well, they're getting up there. They're pushing it back.
No, it's just beautiful. Yeah. I mean, and if we did that, so you got I guess, the top of the box. Oh, there's a 1950. That'd be a good one. If we got it up there, there's a 10 to 12, 1950. Let me just see this for a second. So is there
So right up here, we got the 1950 we got is a noon.
Yeah.
If we stretch it out, we do actually have a 1950 for the end of the day.
Oh, that would be it. 1 second. Hold on, let me find out.
We throw away a few points along the way to do that because you're basically right at the money and you got to the end of the day.
Yeah, right. So 1 second. Hold on. So it's not the 415 then, right? Is it? Well, 1 second. Oh, it's the daily, right?
Yeah.
There it is. I got it. Okay. So.
Yeah, it's all about your target.
Yeah, right.
That's really what it comes. Well, and this is something I've learned more and more and more is.
Okay.
It's about what am I shooting for. Once I know what I'm shooting for.
Yeah.
Then I can look at the bid price.
Okay.
Okay. And go, is that a good reward for me? And then I can look at my risk and go, is that an acceptable risk?
Okay.
Does that help? Does that make sense?
No, it helps. This is important. Yeah, no, this is cool. Okay, so let me bring this back 3 days, and first I'll give you my target, because that totally makes sense, because when you're talking the Nadex platform, folks, you're talking short-term options. That's the reality, and the quicker you can get out of them, the better off you are. So, when I take a look at this, you first, right there, it actually, there's no way we're going down $25 today. That's 1927. So if we don't go there...
And 1927 would take us right to a deviation move down.
Yeah, and I don't see that. I just don't see that happening today. I see this is going to be like a subtle just give up a little. Do you know what I mean? So it's going to be like a... So if we did the lows of yesterday, 1931, it's not a bad setup.
It's also like having a breakthrough settlement right now to get back up there.
Yeah.
So,
come on, push it, push it.
Push it and then...
Yeah. So I guess the it's going to be interesting. If it can make it to the 49, the 30... The 1930, and even we hit 1931 this morning, the 1930 is game. It actually is game. You know, I think we'll bounce off it, but that would be game. The real question is that in 2 hours, see, I got a feeling the 2 hour one would be the one, because in 2 hours, see, I could see you could, if you're out there at 49, 49, you can hit 39 pretty easy. Do you know what I'm saying?
Yep.
We know 100%. That's not a lot because they can bang it around that much. Yeah, and then, well, here, let's go look at the Dow for a second, because what you are going to have is this. Inside the Dow, the Microsoft deal, I don't expect Microsoft to go back topside again. You know, we're up 32 right now. It's already given it up. They come out with good numbers. It's trying to fill its gap from yesterday. But once you basically take in that much bread and give it up right at a high volume swing, it's like you can't handle it. The real key, I guess, inside the Dow is Procter & Gamble. Are they going to be able to stay up at those highs? Procter & Gamble took out its highs. Right. And the first get-go was decent, but if Procter & Gamble, all Procter & Gamble has to do is come down 30 cents, and then that's into its gap. And if that happens, you'll see the Dow go south very quickly. Just because what you have inside the Dow right now, Procter & Gamble's the mover, folks. You know, in a big way, too, not in a small way. 2.5, yeah, in a huge way. And everything else, you got Chevron going down, you got Marvell going down, you get Visa going down, you get ExxonMobil going down, and inside the XLE, which is a big part of the few of those Dow stocks, because the large oil and gas, it wants to go south, you know, so it's going to be wild watching the whole baby shake out, no doubt.
That's the beautiful thing about earnings season. You know, you go in, you get some nice volatility,
yes,
and can get some big moves on that. You got a little bit of an idea of what's happened with their stocks. So yeah, you have a little bit of a leading indicator.
You do. You
can use with that. You look at the earnings the night before, and you're like, okay, so it looks like this may pull on south. You go ahead and watch it in the morning, see if that stock is still pulling on down, what kind of weight it's having on it, and selling that bounce, man.
No doubt. You stay right there, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. Dow Industrials right now up 24. Nasdaq's up 10. S&Ps are flat. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials up 10, Nasdaq up 6, S&Ps are down $1.50. And don't forget, folks, if you haven't test drove the Nadex platform yet, great time to try it. Come over to our website. You'll see the banner on the top, on the side. You can hit that banner, bring it up. They'll put $25,000 of paper money into it. You'll get to understand just how dynamic this platform is and the different contracts that you can trade. And you talk about contracts, man. They have added so many contracts. It's amazing, Darrell, isn't it?
Oh yeah. Well, I mean, they've been adding nighttime contracts. They've been adding all these different contracts, and then November 3rd, they're adding 20-minute contracts to the indices. So they're going to have them where they're going to start at 10 o'clock and then go all the way to 4 o'clock every 20 minutes on all U.S. indices.
So what's going to be important here, folks, is this: is that when Darrell's on the air, right, he explains the different strategies that are out there that you can have a high probability to make good dollars. And the shorter that they get, what Darrell has found, and this is so cool watching it, is that right before these expire, folks, right, the bottom line is that it's very hard to control them. So they're basically kind of whacked out. They're not whacked out. That would be the wrong term. But the fact of the matter is you can risk very small amounts of money in the last, normally, 5 to 6 minutes right now, right? So it's going to be interesting to see what ends up happening with a 20-minute one. My God.
Well, I mean, yeah, they're going to, well, the thing is, you'll have like really cheap out-of-the-money binaries. I mean, $5, $10, $15.
Right.
But you'll also have premium collection.
That's what I'm talking about. Exactly.
We went back and we've talked about how, in the past, I remember, I used to, my main thing that I did was I'd go in and I'd sell, monthly options on the rut.
Yes.
And collect premium.
Right.
And, well, now, that I was excited about, I was just excited about getting to do it, once a week when now the weekly stuff started coming out.
Sure.
And then Nadex comes out, and then I can do it every day. And then they have the intradays. Now I can do it every, couple hours or a few times a day. And now they got 20 minutes. And I'll just hop on there and, I'll look at a trade. And if I'm in the next, I'd look at I'd get started in the last 20 minutes. So that my trade really hasn't changed as far as how I do it. It's just now I have the ability to go in there and do the exact same thing, but 3 times an hour.
Exactly. So it's the key here, folks, is that you want to understand what the strategy is. Because if you understand what the strategy is, what you will see is this. The nature of the product in general, not just the Nadex product, the option product, the equity product, is to buy. That's the nature of the product. So what happens is that when you're on the other side of that collecting premium, you're actually the bookie. That's what it comes down to. And if you mathematically put that odds in your favor, what you're going to get, and this is sad about, the investment business in general, the trading business, you're taking the money away from someone else. There's no doubt about it. That's the essence of it. But what you're going to have a larger portion of the public, including professional investors, on the other side, which is what you want. That's the bottom line.
Yeah. Well, I mean, even, in some of that, as far as, you're definitely, there's either a winner or a loser, but at the same time, you may be going in and selling 5 spreads to somebody, and they're buying 5 spreads in order to hedge off like an ES position.
Yes, no.
And it goes down, and in that sense, both of you are profitable on, obviously the ES, there's still something else going on. But, they may have lost on the, the opposite side of the position you took maybe on the option, but they may actually be profitable on, the future contract they were trading.
Yes.
Just like an options, because there's so many infinite variables, as you know.
Yeah.
When putting trades together, that somewhere along the way there's a loser, but it isn't always the person that took your trade, which is the good thing.
Yeah, no.
That doesn't have to always be, so people bring their, does somebody always lose when you win? And I'm like, well, somebody's always losing, somebody's always winning, but whether or not that's the person that took your trade, not necessarily.
Yeah, no doubt.
Yeah.
If we take a look at the, so some of the high volume stocks, and this is going to be a low volume market out here today, no doubt, folks. Apple's going to be interesting because Apple is over those highs out there. No juice, but they're over the highs. Amazon, folks, you got Amazon now. What's going to get intriguing with Amazon is this. Amazon get down to 284. They're at 290. That baby's going to 250, folks, okay? So that's going to continue to keep pressure inside the NASDAQ 100 as well as the composite. You stay right there. Darrell and I are coming right back. Dow Industrial's up 11, NASDAQ's up 5, S&P's are down 1. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell and Tom O'Brien. Appreciate you growling and prowling with us out here. You get Dow right now up 28, NASDAQ up 13, S&Ps are up $1.50, and of course, don't forget at TFNN we do live programming every trading day, 8 o'clock in the morning to 6 in the afternoon. All that programming, folks, get right on your cell phone. TFNN.mobi. If you'd like to get Tiger TV with the charts as well as the audio, just go to TFNN.com. You'll see the TV on the top right-hand corner. You hit that TV, and what will end up happening right then and there is that you can get the audio as well as the video. So we had a heck of a bounce out here this week. There's no doubt about that.
Yeah, running back up. Looks like it might go back up towards that target you were talking about.
And if we go pull this baby up, we're looking for the 49 on the S&P. That's what we're looking for, folks. Oh, this is interesting. Okay, we're at 48 right now. Okay, so here you go. And this is what you want. You want it with lighter volume, man, and this is what we're going to get. Okay, so when we came down here, let me see this for a second. Okay, so you get 5 minutes. Okay, cool. So we came down at right when we started the show at 10 o'clock, 101,000 contracts. Thus far, we are at 25,000, so that's pretty cool. We're going to tick right into it. Okay, so now let's go over to the platform. Okay, let me get there she is right here. Okay, so if I bring up now, And this is what we want to do. Looking at that was nice how that scan-up just picked up that one at the end of the day, because you are giving up points. Okay, that's 42. Let me just see this on the other side. So if I go to the 10 o'clock one in the morning, 10 to 12, that's 50. Oh, that's interesting. How you still... See, that gets interesting, because you're at 46, right?
Right.
And you're at 42. Let me just see how this one shakes out. So if I do 10, that's still pretty intense, actually, right now. You're giving up 370 for 630. So what you want, folks, you want one more little bounce up here. So the higher it can get here, the better off it is. That's what it comes down to. Well, 46. Right. That's not bad. So this is interesting, right? The longer it stays there, you know what I'm noticing here? So check this out, folks. The longer that it can stay up here, that this bid and offer is really getting competitive up here. They want to sell some contracts, right? Because it hasn't...
gyrating like crazy.
Yeah, right. And so what I'd be looking to do, folks, is that there it is. Okay, so it's just tucked into it, and it looks to me like... You must let it hit.
You got that 1949 like to the tick.
No, I know. Yep. And that's crazy, right to the tick. So when you get it like that, okay, it's going to try to pop over it. And what you'd want to do, and this is what I'm going to do right here, 46. So the real question is, let me pull this back. I think the end of the day is the number, man. Because if I go into, you're still at 42, almost at 43. Oh, I see. Of course it's the end of the day, right? Because what you have is that your maximum profit is much more, right?
Oh, yeah. Well, I mean, and you're not really paying for maximum profit being higher. You're just paying because you're very close to the ceiling at 1950.
Yeah, right.
So it's like an at-the-money option. It's going to have the most premium.
Yeah.
So, I mean, if it was, you could have end of the day that, could still have a large profit and have very little proximity on it.
Okay, so let me go back to the 10 to 12 for a second. If I do the 10 to 12, it's 370 for 630. 3 to 1. Right now, so what you have is we get 2 minutes left. See, it's not going to do the volume, period. And what you'd want to do is that
it's going to get up. Yeah, you're right. By the end of this here, it's going to get up there on lighter volume.
Yeah, which is exactly what you want. So the reality is that when you're looking at this, folks, realistically, that's not that bad. You can risk $37 for 63, and you're doing that. And what you don't have to do, and this is what's important to understand, you don't have to wait until 12 o'clock to close that. That's the reality.
Right.
And that
is that's important.
Yeah, no, that's exactly.
It amazes me. People get the option. They're like, well, I got till this time, this much. And I'm like, well, in the future, you have, basically massive profit all the way down to zero, but you don't just hold on to it until the end of the day to see where it lands.
And that's the trade. That's the trade, folks, because what you're looking for is, we've got an hour and 20 minutes? Yeah, you get an hour and 20 minutes. You get an hour and 20 minutes for one more spike down. And if you did something like that, what you want to do is you want to put the buy back right in. Because the last time we were up at this level, the operator turned around and sold huge amounts of contracts, putting the S&P from 1949 down to 1939 in a heartbeat. And what you can expect, and I expect what you're going to see that operator come back in. Because that operator is trying to protect his position or her position at that particular point, too. And what we haven't seen yet, doesn't mean you won't get it, but what you haven't seen yet is the expansion going topside for the long position. That hasn't come into play yet. What has come into play starting yesterday afternoon was the hit on the S&P on the way down. You did the same type of hit, all of 40 minutes ago. So we'll see where that baby shakes out. There's not much action out in this gold market out here for Friday. And I expect, they hit gold a little yesterday, but they can't hit it today. So what you're going to have with gold is that's just on the weekly basis, it's tested the swing point from the 15th of October, and it's done that with lighter volume. So I think the S&P is the trade out here. The NASDAQ, we know, doesn't tick correctly, or the Dow. You know, if we go over to Microsoft again for a second, I don't think Microsoft's going to be able to handle it. No, it's up 77. So Procter & Gamble is the one inside the Dow Industrials. And Procter is over its high, and it's over it pretty good. You know, the high up there is 85.40 or at 85.78, and it's going to do the volume. We're at 5.5 million. That was 11 million that it's doing that. So when you look at those different indices, it looks to me like the S&P is the one, man.
Yeah, out of all the groups.
Yeah.
You got Russell bouncing off settlement too, by the way.
Oh yeah, well, and that's something. The Russell. Now, let me ask you something. Inside the Nadex platform, how is the Russell at the spread trading? How is that?
It's great.
Okay,
yeah.
Cool. Okay. Because
it can get a little crazy on the premium sometimes. So I'll put that out there. But yeah.
Yeah. Because what does happen with the Russell, folks? This is what's really wild. If you trade the Russell in the futures, the moves. Now I can see why the premium.
Right.
Basically,
yeah, but it's not too bad. I mean, like comparative to the risk you're taking on when you throw on a Russell contract, it's really it's very acceptable. I mean, just to show you an example right here. I mean, we got 21 ticks, 29 ticks. I mean, that's 2 points. That's nothing in the Russell.
Right.
So yeah.
Yeah. How cool is that? No, it's not, because what happens with the Russell, folks, is this. It stays still, it stays still, it stays still, and then whack! It either goes one way or the other. Particularly, man, when they hit that thing, they hit the thing so hard, it's amazing, man. There's no doubt. If we take a look at just the SPY in general, I know many just don't have the futures up, and what you're going to see in the SPY is that what we're going to test, and I suspect before, next couple hours, we're going to test that low that got swung out there at 10 o'clock. And that's exactly what you're looking for on selling that, excuse me, folks, selling that contract at the 1950 contract. You're looking, that's all you're really looking for. You're looking for another go down to that level, and you take your money and you run.
And so take profit. To redefine that one more time on this one?
It would be the 39.
39, okay.
And so, what happens there is that you'd have to actually put that in at about 40.75 or something, right? That would be the reality, right?
Yeah.
Because what happens, folks, is that the bottom of the range is 1940. And what happens, there's no way we're going to go to 1940 before the fact. And what does happen with the S&Ps, though, is that you see it can get to 40.50, 40.75. And what I found, Darrell, was the S&P will do that. The NASDAQ, when you trade it, will not do that. It won't. You know what I'm saying? Meaning, if you're trading the bottom of the NASDAQ, are looking to get out at the bottom of the box, the NASDAQ holds more points inside it than the S&P does. And I think that's because the S&P is just more competitive, right? Well,
in the S&P, are you talking about the spreads?
Yeah, the spreads. I'm talking spreads, yes.
Yeah, because the spread's taken also in dimes, and over on Nadex, and the NASDAQ takes in whole points.
Right.
And now, I mean, they tighten a bit of spread up. It's just like one, or whatever. But still, just that fact alone is going to make it not jump around as much. So you're going to see that S&P move around a whole lot more, because it's even it's taking like the full size S&P. It does. It's taking tighter than the E-minis.
Yeah, it ticks a lot tighter, which is pretty cool. So what you want to wrap your head around there, folks, it doesn't matter how far below you actually go. That's important to understand also. Don't sit there and wait that, oh my God, I can't believe it's not going down another half a point, when in fact the index is 4 or 5 points below it. It won't. Because that's just how it works until these things expire. So it's important to understand.
We also got the composite starting to move negative as well. So it might be the breaking point. Notice how we're moving up on a negative composite right there. Yes. The New York Stock Exchange composite.
Right.
Going on. So this might be the point where it really decides that right here just breaks down below net 40,000 negative shares. And trading below today's average. So.
Yeah, and what does happen is this, folks, okay? It's going to be, no doubt, hard to basically stay in the red today because of the expansion that we got this week. However, that being said, the FTSE and the DAX can't get any traction out there. It's not like they did it down a lot either, but they're certainly not up. They haven't done what our markets actually have done on this bounce. And the same with Asia. Asia hasn't been able to get out of its way. When you take that together, take Amazon basically getting toasted, it's not that it's just one stock getting toasted. What you have out here, folks, is this. You have multiple ABC structures on the way down, all over the marketplace. And you do not have ABC structures on the way up. That in itself tells you, in the bundle of stocks that we have, we're in a much larger ABC structure on the way down. So, you know, I totally understand the type of bounce that we have. That, you know, this morning I'm working out with Nico and, you know, a couple of other people in there saying, yeah, wow, what a bounce here, man. We were going to the moon. It's like, and it's really wicked because I have to keep my mouth shut in there because it's like, oh man,
like Tommy's the naysayer.
No, yeah, and these are long-term people, so the last thing I want to do is discourage anyone. Do you know what I'm saying? It's not even close. It's easier keeping my mouth shut, but
right, yeah, I've learned that over the years. So you're like, oh man, it's horrible. And you're like, oh really? Okay, I'm not helping. I need to shut up.
Well, it's just how markets go, man. I mean, the thing that's amazing to me is that over the course of time, I guess, nothing ever changes, folks, in the marketplace. It just doesn't change. The banking community has such a great public relations deal that no matter how many times they basically take everyone to the cleaners, it never changes. I mean, they're rewriting history right now. I mean, they're rewriting history like, oh, these poor banks have got hammered for no reason whatsoever. They're paying fines for no reason. That isn't how it works, folks. They're paying fines because it's part of their overhead. And yes, they know exactly what they're doing, taking everyone to the cleaners. That is the game. That's their structure.
They're here for a reason. That's to make every dime they can off every consumer. I mean,
yeah, and to skirt as many regulations as they can. Period.
Yeah, they're good at that.
It's huge,
sometimes.
Man. Yeah. It's huge. That is the biggest part. I think one of the biggest parts of really getting your head wrapped around even long-term deals, if you understand that, you're 10 times better off because you won't take the excuses that, oh, this is a one-off event. It is not a one-off event. Okay, it is basically the structure of that community. You know, that's what it comes down to. So.
Oh yeah,
and you need them. I'm not saying you don't need them. This is the sickest part about you. We all need them because you need cash and you got to borrow the right way. You all need them. That one has nothing to do with the other. What has to do with it is what is the actual structure, so that you can wrap your head around it as they're pushing out more paper. It has to do with pushing of the paper. It's Darrell Martin, Tom O'Brien. You stay right there. Dow Industrials right now up 35. Nasdaq's up 10. S&Ps are up $1.50. We got gold up $1. Silver's up 32 cents. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 44, Nasdaq's up 13, S&Ps are up 3, and that same trade, folks, it's kind of interesting. So it's 60 minutes, but you'll be giving up $30 for 70, so it gets kind of interesting here. And if we go over and we look at this spike right now, the spike still doesn't have the juice inside it. Right now you're at that 1949, and yeah, it's not even close. 1 second. Yeah, sweet. Okay, so you're into it for 4 minutes right now, and thus far, what we're going into, by the way, folks, is that you're going into 101,000 contracts as well as 80,000, and we'll end up doing about 45 or 50. That's what you're looking for on these short-term trades on a continual basis: a test, a failure, or a success. I mean, and you know it pretty quick. That's the neat thing that does happen out here. Okay, it either makes it or breaks it, like ASAP, which makes a huge difference. No two ways about it, man. Darrell,
I'm here.
Oh,
can you hear me?
I got you. Okay, all
right. So talk about that. We got that test, that massive, high volume spike there. We had 100,000 contracts. Comes back up, tests that high, but it does it with extremely low volume.
Yep.
And that's where you're looking now for the break down to go back down and retest that low of that high magnet bar.
That's right. You're just looking for the other side. That's how clean it is, folks. Okay, that's all you're looking for. It's like, okay, you can't bust them up. You can try to bust them down. You know, and what you do have each test. This is what's important to understand too. Each test that you do, if the test is on lighter volume than even the last test, your probability goes higher that you go down the other side. It doesn't mean you bust out the other side. It just means you go down there. Try that one. You can't do that one, guess what? You're going to go back up top side, try that one. And, you know, that's all the market does on a continual basis, folks. Tries to bust out or bust down. And whoever's the strongest, and that's where this whole bull-bear deal comes in, whoever's the strongest at that point is the people that are traders that basically are in control at that point. And those controls change fast. They change furious. One of the main reasons, of course, folks, is that the larger traders that are out there will flip in a second. Okay, if they think they lost control of the market at one certain point, you flip to the other side. They think you lost control down the bottom, they'll flip to the top side. You know?
Right.
And there's no doubt that on a longer-term basis, the bias is upside. The reason the bias is upside, that I don't care if there's 1%, 2% inflation, there's always inflation going on. Even in dead inflation right now. That's a fact. Okay, so when you look back over the course of 20, 30, 40 years, you have to be at higher highs. You know, you don't have to be, but you're going to be. You know, just because everything is worth more. Well, no, money's worth less, everything else is worth more. That's what it really comes down to. Yeah, right? I mean,
right. Money's worth less.
Yeah, money's always worth less. And you just got to hope that you're not in a country that is really blowing their brains out, you know, because what does happen then is that then you have a situation that you have runaway, you know, inflation, and it just destroys the value of money like in an absolute heartbeat. And in our case, we're on the other side of that right now because this dollar, no doubt, wants to go, to me, a lot higher. The euro wants to go a lot lower. And that's the trend that I think you're going to be able to see 3, 4, 5, 6 years from now. That's what it comes down to. So we'll see where this whole thing shakes out. Darrell Martin, Tom O'Brien. Darrell, thank you so much, man. You have a great one, a safe one. You stay right there, folks. We're going to be, well, our men, Paige and Nico are going to keep you healthy, happy. Darrell's going to be coming back. Dave White, myself. Have a great one, Darrell. Have a safe one. Have a great one, folks.
Hey, you too. See you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.